Welcome to week 39 of my Trading for a Living challenge, where the goal is to match a 9 to 5 job trading options. So we can see here for week 39 that I made $2,226, which is over the recent weeks quite a big amount. Last time I reached over 2K was in week 28, and the goal was obviously $1,000. Therefore, I beat the target by 116% or $1,100 in absolute terms. And if we have a look at the total I've made for the first three out of 4 weeks, I made 4.381K, and the 9 to 5 goal was 4.1K. So I have beaten the goal with only 1 week to go. However, there is a caveat to this because I'm holding some losing trades, which I need to roll those positions to make them more favorable, which will cost me money to do. And hopefully I can offset those trades with other puts and calls to obtain a credit. And we'll go into what those are later on inside this video. But want to make sure that you guys understand that so far I have already beaten the monthly goal of $4,000 by around $200 to $300. Now, if we have a look at the cumulative tracker, we are ticking down nicely now, only a 5% deficit from the 9 to 5 job. So we would have done 40K in the 9 to 5. We've done 38K in trading. And the last time we were at 5%, we have to go all the way back to pretty much week 2 of -1%. Then after that, it didn't really go according to plan until we started trading into a margin account, where you can see these numbers are dropping now, which gave us more capital to place more trades. And if we have a look at it from a time perspective as a cumulative factor, we have done 1 whole day of trading in 39 weeks, which, is crazy. And we made $38,000 in 1 day. And said before, I think that will be a YouTube title video in itself, talking about more in detail of how we actually achieved this. But if you've been watching weekly, you guys know what my strategy is. I sell options, I roll positions, I look for high implied volatility, and look to trade between 45 to 60 days out. So before we look at the trades for week 39, if we have a look at the buying power situation, we've used 38% capital, which again is way below the 50% target that I want to hit. So there is room here to still place trades. I don't want to be over leveraged. I'm comfortable hitting the targets now, pretty much comfortable every single week. And hopefully week 40 should be a good week. Now, before we go into the trades, you will notice here that I've started to place some trades in the June cycle. So if we have a look here, I've rolled some Coinbase and some Teslas into the June cycle. And what that basically means is the way I manage positions, when I open a position 45 to 60 days out, I end up either closing the position for a profit, or I will roll the position around the 21-day mark. So this Friday would be 21 days of the May 19th expiration cycle to roll into June. But for week 39, i.e. last week, I rolled some of my positions out. And 21 days isn't a fixed date. It can be 18 days or it could be 27 days, but it's around that mark. And the reason why I do that is to eliminate any tail risk or gamma risk with trading options. So when you trade options, again, the closer you are to expiration, the quicker the theta decay, which is good, which is what we want when we sell options. We want to pick up that premium and let that decay happen naturally. But what also happens is your gamma, which is another option Greek, increases. So therefore, gamma looks at the acceleration of your delta. And again, I might be going into a bit too much detail here, but it's important to understand why I roll at 21 days is that if an option goes against me in the last 21 days, the cost to buy back that option to roll it below 21 days increases dramatically because of gamma. So the way I look at gamma is the acceleration of your delta, and we don't want delta to accelerate against us. It could accelerate in our favor if the position goes in our favor, but I would rather just roll it out, get some more time value, get some more extrinsic value to place these positions. So hopefully that makes sense. Again, comment down below if you want me to do a video around the Greeks and to understand this in a bit more detail. So if we have a look at our positions that we have, we rolled no new positions. So we rolled some Teslas, some Coinbase, some Google, and we closed out JP Morgan as well. So if we firstly have a look at Tesla in terms of the new positions that I've made, I've basically rolled down the 220 call into the June expiration at 200. You can see Tesla's trading at 162. Those options that I rolled, because it was before earnings, Tesla dropped about 4 to 6% on earnings. And so these calls I could probably still roll down as well. 2 contracts of that. So I managed to get $498 net credit. And then we have a 1 contract, 240 to the 195, picking up $334 net credit. And these are the buying power or the margin requirements to hold this position. This week or week 40, I'll be rolling this position, which is the inverted strangle that I have. And what I mean by inverted, my put is higher than my call. And with Tesla tanking to 162, this put here is going to cost me more to buy back. So this put that I'm selling really offsets the debit. So what I do every single cycle is roll the call up by $5. I'll take a $300 to $400 debit, and I will per contract. So this is obviously times by 3, but then I will sell a put to offset that debit. So I try to do this for a either flat or very small debit. Now, this put is going to cost me a bit more to buy back as well. I might be taking a debit, which is why when I talk about that, this number is probably going to be quite low. And that is mainly down to that I might be taking some debits in this particular cycle, which is why I wanted to capture enough credit this week to be able to do that. So if we have a look at Tesla to see where we are, we're starting to get a bit congested here. So we do have our 300 shares sitting there at 280.50. This is the inverted strangle that we talked about here. My 180 put is in the money. The only good thing is, or the silver lining, we're closer to the 130 strike now. So this is going to be better for me now to buy this back, cheaper to buy this back than what I sold it for. It's still going to cost me between $300 to $400 because I'm rolling up by $5. That's $500 of intrinsic value I need to buy back. And the reason why it's not 500 is because of the time value of the June option, which then decreases it down by $100 to $200. Again, I'm rolling up by $5 and it's costing me around $3 or $4 to be able to roll it up. So it's a good trade to have. But then whatever, let's say we roll this for a $2 debit, therefore I need to sell this 180 put option for somewhere that I'm making at least $200. I don't care really where it is, to be honest. I just want to make sure that I'm maintaining this position. And you can see my 200 and 195 calls sitting there in good positions. I've got the ability to roll this down this week as well if Tesla continues to drop. It's, I don't know where pre-market's at 160. So it's only a $2 difference pre-market today. So that's what I'll be looking to do for that one. No new trades on Meta, but I will be rolling Meta today in, in this case, week 40. It's got earnings today after the market close. So it's the same situation that I've got here. I'll be rolling my short call up to 120 and then using this 180 put to offset that. I want to try to bring this as low as I can. I do think Meta will tank on earnings if it misses on revenue and or EPS, because again, we've got some massive divergence here. We've got higher highs and then lower highs happening here. Massive divergence, just gone up in a straight line. It needs to come back, in my opinion. If it does fall, where I think it will hold or get some support is at its April pivot level. So that's an area to watch out for today. And I'll probably be releasing this video tomorrow after earnings, so you can check to see if I'm right. And so nothing so far on Meta. I will be placing those trades today on week 40. As we've got Coinbase and Google. So Coinbase, I've still got a 115 call and a 110 call that I need to roll out to the next cycle, which again I'll do this week, which will bring me some nice credits in. I did roll, which probably was the worst timing, is rolled my $45 put that I had for the May 19th and just put it across to the June 16th cycle. Because if we look at coin, I think it's trading at around 50-ish. Yeah, 54. I'm only $10 out here because we've had four, okay, these are 4-hour candles, but we've had a couple of bad down days starting to approach again this low here. I've still got some buffer room here. And again, I can sell calls against it. I can do a lot of things here. It is 8 contracts, which if we look at this is 6,000. It's not a big amount, but that number will rise as Coinbase continues to drop. But again, I'll be looking to manage this position by selling calls against it or doing what I need to do. So we're still early in this cycle as well. So again, if we just have a look at this, it's been ranging. I don't know, really. You could argue that this potentially could be the range that it's floating around in, or it could start testing. I do think it will test the lows of $50. It's pretty much flat pre-market. So that's what's happening with Coinbase. Google, relatively straightforward. It's got earnings next week. I think it is in week 41. We rolled up from the 90 to 95. I do think Google will actually drop on earnings. Again, it's one of those where we do have this higher highs, higher lows, very similar to Meta, and we're hitting this kind of high here. But again, we still got this missed pivot level, which is a key level to watch. So again, it's only one contract. I can sell calls against it if things starts to go against me. Maybe selling a call and turning this into a strangle here is not a bad thing around this level, because again, it has to beat this level here and I that play. So it's something to consider or think about for Google. SCHW is fine. We closed out, and then this is just confirmation that we closed out of JP Morgan for $4. So we made a total of, what's that, $165 on this trade. It's not a huge amount, but again, something that, was relatively safe in my opinion to do. And lastly, we have Mara. And again, Mara has been tanking, and I think I'm up like nearly 70% on this position. So again, I've got the ability to roll this down. It does have earnings. As you can see here, it's gone down by quite a bit. It does have earnings next week or the week after next. I might let earnings play out first, see what happens, and then roll down this call. I can't see it getting to 2250. It has to do, again, another double in 20 odd days or so, which I'm not expecting it to do. So I'm relatively comfortable with that position. So in all the positions that I'm fearful of, if that's the right word, is this Coinbase 45 put, which is coming closer. And for Meta, it's got earnings, so I need to roll out this one. I'll roll both of these puts out, but I might close this put out. Actually, I will probably just roll it, to be honest. These are the two I need to roll out, and obviously roll out the call, and I'll also roll out the Tesla one as well, because we're getting to 21 days. So I feel I can do this. I will probably make a credit overall in this week, only because I've got these Coinbase ones that I can roll down, and I've potentially got this Mara one if I need to bring in some more premium to offset some potential losses in Tesla and Meta. I probably won't be looking to open any new positions, just readjusting positions, and I'll also look at my June positions that I've got on to see how they're performing. So that's what I do. I roll positions up or down in the current cycle, and then I roll out at 21 days and really keep these positions, keep going and keep generating that premium and that credit to make an income. So I really hope you've enjoyed this video. Make sure you like and subscribe, and I shall see you guys in the next one.